Ken Griffin isn't exactly thrilled about retail investors trading individual stocks. He'd much prefer if you left the decision-making to the pros like investment banks.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. According to Griffin, the SEC should be steering retail investors towards safer options like mutual funds, index funds, and wealth management products offered by big banks, such as J.P. Morgan and Morgan Stanley. He believes these professionally managed products offer better risk-return ratios and ultimately protect the interests of retail investors. However, he does acknowledge that some retail investors have a knack for identifying emerging trends and profiting from them, citing examples like Tesla and Apple. But let's take a step back and examine the irony here. Griffin, who runs hedge funds and manages large sums of money, is essentially advocating for individual investors to hand over their money to firms like his. It's almost comical how he's trying to divert attention away from himself and onto individual investors. It's like saying, if you can't beat them, distract them. By pointing fingers at retail investors, he's deflecting scrutiny from his own industry. This tactic of confusion isn't new. We saw it during the GameStop saga when attention shifted from Wall Street hedge funds to individual investors. Suddenly, the focus was on regulating small-time traders rather than the big players who were arguably more responsible for market volatility. It's a classic case of misdirection. Let's not forget that Ken Griffin himself started out as an individual investor with a modest sum of money. He understands the desire to beat the market and make a profit. Yet now he seems intent on maintaining the status quo that benefits him and other major players in the financial industry. And speaking of regulation, Griffin has a complicated relationship with it. While he may publicly advocate for more oversight of retail investors behind closed doors, he's likely not thrilled about the idea of additional regulations that could affect his bottom line. The current system works well for those with significant assets under management, allowing them to hedge their positions and adapt their strategies as needed. But let's not be fooled by the flip-flopping opinions of financial elites like Griffin. They may change their tune on cryptocurrencies or market regulations depending on their interests at any given moment. It's essential to remember who benefits from the current system and who gets left behind. In conclusion, individual investors should be wary of attempts by figures like Ken Griffin to steer them towards certain investment products. Ultimately, it's up to each investor to educate themselves, stay informed, and make decisions that align with their financial goals. Don't let the distractions of the financial elite sway you from your path. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.